He's joining us right now for more on the M&A landscape, the current driving force behind activism, the types of companies ripe for campaigns. Mehrotra is the co-head of Americas for M&A at Goldman Sachs and global head of activism defense. Good morning to you.
Good morning.
So where are we here? Given where the markets have been, it doesn't feel like we're seeing headline-grabbing deals the way we used to.
No, listen, you're absolutely right. But I would say that there are two areas that give us optimism. One is the data, right? So the June, July, and August data around the M&A flows are actually pretty good. The other is just the sentiment with our clients, right? When we talk to the C-suite, when we talk to boards, they are ready to move forward. They're ready to dust off maybe some of the things that they had put on hold some time ago. So that gives us some optimism. And then when you also think about, the fact that we started the year really in a massive trough on the M&A side, the recovery has been quite, steady, slow, but nonetheless steady.
When you say you're seeing confidence, and we always think about deal making as sort of a barometer of confidence, oftentimes a lagging barometer because you sort of see the market move before the CEOs do, but sometimes it reverses.
Yeah.
In what spaces do you specifically see people thinking, okay, I can move now?
Yeah, so if you look at the activity that we've already seen, natural resources has been a source of resilience and strength. The industrial sector has also been a source of resilience and strength. And I think to your point around the lagging, the TMT, the tech, media, and telecom space is probably going to be a little bit slower in its recovery. And the other place where I think we need a little bit more time is the private equity area. The private equity business has slowed down quite a bit. We're optimistic that take privates are going to continue to come back. We're spring-loaded with the amount of dry powder that private equity has on the sidelines. If you also look at the merger business and how much cash is sitting on corporate balance sheets, that gives us a good indicator that, these are all signs that I think will provide good tailwinds, for us as we go forward.
So how much is the regulatory landscape, and we're talking about this Google case that just began yesterday. That's not a deal per se, but there's been lots of deals that have been FTC and DOJ have sought to block.
Yep.
And how much of that has become a damper on things?
So I think antitrust has been a constant piece of the puzzle throughout, right? We used to think about antitrust and the regulatory paradigm as something that you would think about in a deal, maybe mid-deal, towards the end of the deal. It's completely front-end loaded right now, and I think we're in an environment right now where certain deals just can't get done, right? And I think that buyers and sellers are self-selecting, and as you think about who could be a buyer for your business, if you think that the antitrust risk is relatively high, if you think that the runway on getting clearance is going to be a year and a half, I think people are already self-selecting and saying maybe that's not a deal we want to do. Even if we could prevail, maybe we don't want to wait 12 months or 18 months to see that through.
What has historically happened to deal making in an election year? So we're about to hit an election year.
Yeah.
And there is some sense and this goes to the regulatory scheme of it, there's also the confidence scheme and everything else.
Yeah.
But if you believe that there's going to be a change of administrations, in 24 or really 25,
sure,
you might decide you're waiting. If you don't, maybe you're not. I don't know.
Yeah, well, that's one way to look at it. And I do think the election bears some on, what happens. But I also think more fundamentally, it's the economic outlook, right? We have, over the last 6 or 9 months, really seen an improvement, a reduction of uncertainty, the recession risk, if you think about that. Those probabilities have been consistently coming down. In spite of the CPI data just a few minutes ago, we've seen a stabilization on the inflation front. I think all of those are good macroeconomic indicators, and I think they drive the thinking a little bit more than what might happen, let's say, 12 months from now in kind of the election. And by the way, if you're a CEO or you're sitting in the C-suite right now, what you're contending with is that in this transition point in M&A that we sit in right now, do you want to take advantage of the first mover position and kind of move first and try to go after an asset that might be available before some of your competitors do that, or do you want to wait and see?